Hi guys, Girolamo, Aloe here, and today I want to answer to a question of a member of my Facebook group. He asked, what time frame do you trade? Okay, my answer is I invest not in relation to the time frame. I invest in relation to the trading opportunities that I have in the trading scenario and the trading area. This does depend really on the simple time frame. The time frame is a simplification. The simplification was built to understand and to have better details. Indeed, we divide the market in slots, in time slots, in relation to what we want to see. And the habit is to define the time for the time frame, daily, and so on, daily, weekly, monthly, and so on. This is a time that divide just the development of the price, and this let us get much more details. But time frame is a simplification. It is not the market. The market shows conditions, and these conditions don't depend on the time. They are the opportunities that the market conditions are showing me that tell me how to invest. It is not concretely the time frame. The time frame is a simplification that I use. I can go to trade for the long term, or I can go to trade for the short term, but in any case, I always consider, always and absolutely, the strength of the distribution and the strength of the accumulation. These are different things. This cause develop a markup or develop a markdown, and this is what I go to measure, to estimate. I estimate this because this is important, and I don't make this using the time. I make this using the trends. The trends, the reversing, accumulation points, distribution points, but this depends on the trends. The reversing of the trends. So how the trend is going and where this is reversing, because where this trend is reversing, I get an accumulation point or a distribution point. This is what moves the market for me. So, according with this, I define my trading plan, and my trading plan is built by the market condition. My trading plan, in this way, builds my trading action, and my trading action are built by what I have in the trading plan that is a consequence of the market condition. So, my trading action are related to the market condition in this way, absolutely. And then when I have these details, when I know where I have to go, and I know where the price is going because I make an estimation of the markup extension, the markup of the markdown extension according with the strength of distribution and the strength of accumulation that I have in the charts. So I can define my targets. Targets can count by segmenting the developing of the strength in a demand accumulation supply distribution. My segmentation just give to me my trading plan can involve several trades because this develop a trading action. The trading action can include several trades, in general 3. So, understanding the market condition develop my trading plan. My trading plan develop my trading action. My trading action defines some entry points, and these entry points are just considered according with the demand cycle or the cycle or the effort that I have in the market. The cycle of the effort is concrete important. So when I want to set my entry point in the market, I need to understand there's a cycle because the cycle of the effort or the cycle of the demand shows to me just the progression of the strength and weakness in the demand. Every cycle shows a phase of increased demand and a phase of decreased demand. So my work is to trade according with this. If I want to enter the market and I want to sell, I just look for my entry point and wait to see that the demand is weak. If I want to enter the market and I want to buy, I wait according with my trading plan and my entry points until I see the demand that increase. So the demand increase I can buy, the demand increase I can sell. This depends on the cycle. The cycle is a particularity because I can see demand and supply everywhere in the chart. Of course, this is obvious. But when I go to look for the demand cycle or for the cycle of the that is just the cycle of the effort in the market, I just look of something where this is concretely clear. Having clear my trading plan, my intention, my entry, I can use the time frames just to show me these in the details. So I can go from for a lower time frame or somewhere where this cycle is clear in details. So I know that in many financial instruments that I go to invest, this cycle is concretely clear on specific time frame. So I go to that time frame and I wait for the right condition to set a trade. This shows to me simply one thing, that in the most of the case my trade turns in profit very soon. I don't have the problem to wait for a trade that run in red for hours, and so on, and days, because I follow the demand cycle. I sell when the demand is weak, I buy when the demand is strong, according to the cycle, and having clear in advance what I'm going to do and where I'm going to work. The trading scenario is fundamental. I have to understand the market condition. This is something that is not related to wait the convergence with the rectangles in the chart. People who trade rectangles in the chart don't understand the market condition in most of the cases, so they don't see clearly where is the right point to have a sell and so on. They just watch the rectangles. The rectangles are a simplification that is completely not really useful if you are not able to understand the market condition. You can use them if you know the market condition and you understand everything, but in the other case, if you don't understand still the market condition, they are not useful for you. So it is concrete that the demand cycle. The demand cycle is crucial, is concretely what gives you the chance to open a trade without see it going red. This is clear. And in this circumstance, it is clear that my way to trade is not really concrete. It is not really depends on the time frame, but it depends of the strength of distribution and the strength of accumulation. This is important. This strength is developed time by time, reversal point by reversal point. I mean, accumulation point with accumulation point, distribution point after distribution point, and so on. This strength is built, and building this later, I get my chance to have my trade, because this strength is the building of the chaos, and the chaos is the markup, the markdown, and so on. And in the same way, the developing of the strengths gives to me the development of a trading area, and this gives to me also chance to sell high where I get a distribution point, or to buy low where I get an accumulation point in the same trading area. This is always very productive. So I don't trade according to the time frame, because the time frame is a simplification, and the time frame is not the market. I trade according to the market, having clear the market conditions as a first thing, the trading plan that the market condition gives to me. I do nothing. I just read the tape. So the market condition, the trading plan that the market condition builds for me, and of course the trading action that I can have in the market, and the demand cycle for where I can enter with my entry point, where I can enter the market. So I do nothing. My job is not to define where I have to enter. I simply read the tape of the securities that are taken and distributed and accumulated. I don't develop the market. I just read the tape and I follow the tape. This is my trading, and this is simple. So guys, if you have questions, please contact me. I will try to give you much more explanation, much more details. Thank you to listen to my words. Thank you to be here, and see you next time. Bye bye.